Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, June 17th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. I hope you all had a fantastic Father's Day weekend. And we have a holiday shortened week here this week with a Wednesday Juneteenth holiday. So we have kind of a split week here with 2 days on the front end, 2 days on the back end. A little bit of a rollover gap here in the ES in the daily time frame, with the ES currently down $3.50, but gapping up to the 5,500 level, testing that level for the first time ever. Still a very clear uptrending market overall. It'll be interesting to see how the market trades here this week with a split holiday session right in the middle of the week. For the most part, it could be a sideways to up affair, with this market kind of drifting quietly higher overall. This market has had a very nice upward trend so far in the month of June. Failed new lows, sideways to up, breakout days, continuation days. It's been very solid. For Friday's market, we were looking for bulls to defend prices below the previous session's low for a shot at a low range outside day up. And the ES almost got to the highs there for an outside day. A nice little quiet move higher off the previous session's lows. Now rollover gap up here to these highs, and again, any pullback early in the week could be an opportunity to take this thing quietly higher. Never sell a dull market comes to play right about this time. And again, overall, this market continues to work its way higher to the upside. We mentioned before, 5,600 is our next major target based off of the key range. Wide key range that developed here a couple of months back here. That impulse sell-off there, the breakout to the upside opens up 5,600. 5,600 is also the midpoint between the next upward price distribution here. 5,400 to 5,800 would be that next level. We can actually take this here, duplicate that, and make the next one 58, because this market has been known to trade in 400-point distributions. 58 would be the next one up from 54. We just got to 54, already trading 55. 56 is the next 100% key range target, and that would be halfway up from 5,400, which means that opens the door to a continuation toward 58 down the road. So right now, still bullish overall. Could be a quiet sideways to up week for the most part, especially with the Wednesday holiday. But any pullback could be a buying opportunity until proven otherwise. If we take a look here at the NQ, similar price action here, testing 20,000 for the first time on a rollover gap up. And again, on Friday, we were looking for bulls to defend the previous session's low for a shot at a low range outside day up. This one came within 1.5 points of testing the previous low, did not quite hit the low, and then went and found the high. So it almost became an outside day up, about as lowest range of an outside day up as you can get, and maintains an overall upward bias. Like the ES, this one could be looking at sideways to up price action here on a holiday shortened week. Any pullback could be a buying opportunity until proven otherwise. 19,924 half was our next upside target, and we're there now. 19,960 the current target. 20,000 is the round number target here. We've hit that target. That is the 100% target from the key range again. Looking back to this impulse sell-off, that high, impulse sell-off down, a bounce back to the midpoint, and you can see how it broke through the high, retested the high, pushed to the 50%, and now reaching the 100% target. Big time moves there, and it all began really right here on the May 1st FOMC key level. So tremendous strength since that time, and we've now reached that target. We could be looking at a further continuation to the upside overall, as tech, especially Nvidia, Apple, remain very, very strong right now. So any pullbacks could be an opportunity for a quiet buying opportunity this week. If we look at crude oil, right now crude oil up about 0.4%, but is stuck in a very narrow 5-day range right now. 1, 2, 3, 4, 5 days. That's a nice 5-day narrow range, starting with a failed new low here today. Prices pushing below 2 3-day lows, and pushing back up into the range. One of the things we mentioned before is on this strong reversal here, especially this strong push back above the 76.50s, that suggested a slingshot move back across the range to the impulse high. That's 80.62. So the expectation is for a continuation to that target up ahead and likely through it, perhaps into 82 up above. So we could be looking at a nice slingshot continuation to the upside up ahead. This is a 5-day narrow range. If we quantify that range here using our indicator, there's 5 days right there. Apply that change. You'll see it's quantified down here as a super significant compression. $2.10 of total range on a 5-day basis, and again, all that is from the first 2 days. You have the first day low, day 2 high, and that's your $2.10 range. Everything else is super compressed, and normally you would get a move somewhere around 6 points of range, at least. 6 points of range is about right. 6.64 would be the 125% target, and the average would be about 5.3. So we're looking for at least a 6-point move up ahead, and a breakout move could take us to that target up above. Can we get a big pullback here with a continuation? How's it going to break out from this range? So that's going to be something to keep an eye on. But right now, this market's still flowing to the upside until proven otherwise, and we could be looking at a push toward 81 to 82 up ahead. If we take a look here at gold futures, gold right now stuck in the range. Again, this one has been trading in a very range-bound manner. It has had some heavy sell-off days that have pushed price back down within the trading range, but it really hasn't broken down through significant market structure. 2280 is the big-time area of support here, and it just can't get below that level. It has built some energy on multiple different occasions, and that energy has been released one way or another. The fact that we're down near the lows, very similar to this here, suggests that we could see another pop to the upside, but this market's really not finding much acceptance beyond 2400 and especially beyond 2450. So if we were to push to the upside here, it could be a rotation back down within the range. The D-shaped profile continues to develop. Very strong support at 2280, and if there were to be a violation there in a transition, we could see a little bit of a pullback here, but this market has done quite well in terms of maintaining this market structure for now. So more range-bound price action until proven otherwise. Looking at the YM here, this one has had a very unique trading range. Some high range wicks. You can see this tail, that tail, this tail. You got a couple of tails back here, and this is over the last 2 weeks. And you've gotten this narrow range that has developed here after all of this, wide-ranging price action. So it's definitely built up a compression here of range, and we could see further development within this range until it's ready to move. If this thing can start to push through 39,250, it opens up a return back toward 40,000. If we drop back down to the lows, perhaps you're testing 37.8. So it's clearly stuck in this range. 39,250, kind of the middle zone here as of right now. You can kind of see the upper edge here, the lower edge down here. And so we're still stuck in this range, and we could continue to see a bit more development within this range here for a while. I mean, this range right now is about 950 points, maybe 1,000 points of range, or there is just shy of that. So there's enough room in there to kind of work back and forth until proven otherwise. We have a flat VWAP right now, so it's kind of happily trading around value. But at some point here, to break through the 39,250 level or fail through 38,250, that really opens up the next key move. Until then, could be mostly range bound. Looking at Bitcoin right now, Bitcoin has had a return back toward the 66,000 level. Right now trading 65,745. We mentioned up here that we were likely topping out a little bit above 72,000, and it wouldn't be surprising to see a rotation back towards 66. That's kind of the center of this range. Here you have 74,000 up above, 66 here, and then down below you have about 58, and that's kind of the range that we've been working with here a little bit lately. Now the transition through 66 opens up the lower edge of this range. That's where you could see a rotation back toward 58. 58 could then be defended back towards 66 and 74. Very well defined trading range up here as well. It's been able to maintain acceptance overall, kind of like gold. But again, that 66K is going to be very important here. If you start to fail through that area, it's going to open up the lower part of this range. And right now, there doesn't seem much in the way of support at the moment to really keep this thing in check. So we could be looking at a further rotation to the downside until proven otherwise. Looking at ETH, now this one's showing a little bit more strength here, up 3.7% at the moment on a large gap up. This one also hanging on to the upper half of the range. 3,400 is kind of the level here to continue to watch. 3,400. If it starts to fail through 34, it opens up 28, 29. If it can hold 34, you're stuck between 4,000 and 3,400. So that's kind of the range at the moment. This one also kind of in a holding pattern ahead of potential news that could take this thing higher, and that may not be until July now. So we'll see if we can get ourselves some positive headline risk with regards to a spot ETF or a couple of them that get approved here, and that could start the next rotation of strength for these markets. So right now, this market hanging in there, 3,400, the key level to watch. All right, that is it for now. We'll see how this plays out here heading into the new week of trading. Happy Monday, and I'll see you in the trading room. Take care.